Flax is one of those crops that I often don't have a chance to talk about. And I'll be very blunt. This is one of those crops that many that we grow in this region that's considered a small market crop. Some say specialty crops. I just use the term small market crop because there's really a handful of people that are very, very interested in it. For those people that are producing or processing flax, this is a really important stuff. But the other thing that happens is it gets to be a very tight network. And sometimes the people in the network don't want to share too much information. So I always struggle a little bit when we talk about these smaller market crops to get good, reliable analysis to make sure that I'm being provide as best information that I can as we go forward. So just with that context, I'm hoping that there's going to be a lot of questions and that we'll be able to talk about some things towards the end. So here's my contact information. If you do have any questions or anything you think about later, I would prefer to have those questions today. But if there is something that comes up later that you'd like to visit about, I'm happy to do that. I would ask that you be a little bit generous. I do have a very heavy travel schedule this winter for the next several weeks. So I will try and get back to you as soon as I possibly can, but it might be, my goal is to within 24 hours, but sometimes that slips a little bit depending on travel and driving and roads and all the different things going on. So please be a little bit patient if there are some questions. So let's first talk about planted acres of flax by state. And North Dakota has historically been, you can go back many, many, many years, but North Dakota has historically been the epicenter for most of the flax production in the U.S. As you can see, there has been some shifting of acres over the last several years. Again, this is from USDA NASS, the National Ag Statistics Service. There was the little red dots on the very top were South Dakota. The South Dakota acreage now is at a low enough level that USDA doesn't report it. North Dakota, their acreage has been slipping, and some of that has been because of competing crops. Some of that has been about the relative profitability of growing flax, just as what Dave Ripplinger has said. But you've also seen a push into the Montana region. So some of this, similar to some of the pulse crops, as well as barley and durum, we've seen this shifting of acreage even within the state of North Dakota, pushing much further north and much further west. So just to realize, the last couple of years we've had a decrease in acreage. Most of that has been in the Montana acres, but some of that is also coming out of the North Dakota acreage. So as a result, our flax production has been slipping. So when we look at total bushels produced, we've seen quite a bit of variation. A lot of that is because of the yield and yield potential, but acreage shift has also been a driving force behind that. So when we look at production by state, and when David talked earlier about locations, when we look at existing crushing facilities, we're looking at potential for additional processing systems to come online. Obviously, the processors are either going to try and build their facilities near where the crop is produced, or potentially where the crop is consumed or the product is consumed, depending upon construction cost, transportation cost, etc. My point in bringing this up is that most of that production reduction, or that slippage in reduction, slippage in total bushels produced, has really come from the North Dakota acreage. Again, we do see some shifting and bouncing around in the Montana sector. Okay, let's talk a little bit about consumption. Now, this is again from USDA, so I don't want to lean too hard on these numbers, but I do at least want to talk about them. So the blue line on top is crush demand. So the vast majority of the flax that's currently produced does go through some kind of crushing facility. The red line is exports. We have had some small export numbers, again, primarily going back and forth across the line with Canada. There's always a few bushels that end up in the seed pile. The residual is, sometimes considered what we can call spoilage and wastage. Now, you'll notice that there really isn't anything in there for human food consumption or for animal feed. Now, a lot of times when we think about animal feed, that's the hulls or the meal, the linseed meal. Although as I've trying to talk to people within the industry to get a feel for what is currently happening, what the price trends are, what the outlook might be moving forward, I was a little bit surprised to learn that there is actually some flax going into the pet food market as well. So not only is the flax used for human consumption, David showed some of the pictures of the packaging going into the human sector, but there's also some of that now appearing or going into the pet food market as well. Again, those relative to the crush demand, those are pretty small. So I really like that pyramid that David had showed earlier about the value versus the volume. The high volume crops for ethanol production or for soy crushing tend to be lower valued. As we get up that value chain, the volume tends to drop. So for flax, for linseed oil in particular, a lot of the linseed oil is used for industrial uses. That could be used for some paints, for varnishes, for sealants, for coatings. A lot of it's used in that area, not necessarily linseed oil going directly into like human food. Most of it's that is from the industrial side. But as David noted, there is this correlation or relationship. Flax linseed oil is not the only oil that can be used for some of those products, although it is a preferred oil for certain uses, since we have to keep that in mind. My point in going through this and the point in trying to discuss it is that the crush sector is still the primary driver behind this. I know USDA always has a tough time tracking some of these smaller uses, some of these more niche uses for products, and flax is one of those. Now, we have a couple crushing facilities in this region that will receive and crush flax. Just to remind everybody, one of them is in West Fargo in Cargill facility in West Fargo. There is an ADM facility in Enderlin. They typically don't, or they have crushed flax in the past. The last several years, they have not had the flax run. From the ADM as a company standpoint, most of that is being transloaded and shipped to the Red Wing facility. So the Red Wing, Minnesota facility is where a lot of the ADM crushing is actually going on. So when we think about crush demand, when we think about competing oil seeds, David did a very, very good job of explaining that. Now, when we think about pricing, and in particular contract prices, or we think about spot market prices, it really is this crush demand that defines and sets that base price. So if we're trying to if I'm a processor that I want to use some either brown flax or golden flax for human food consumption or going into the pet food market, I'm going to have to buy that bushels or buy those bushels away from the crushing sector. So they will have to offer a premium, but it's that crush demand that really sets the base price. Okay. So when we look at the production versus consumption and ending stocks, so this is a common format that I use in explaining pricing and pricing dynamics. For right now, I want to focus a little bit on the blue bars on the bottom. So that's an estimate of the stocks to use ratio. And the reason I use that is so it's how ending stocks, how much inventory do we have compared to the amount of product we consume. And again, in a pricing sense, when we look at market dynamics, when we think about price movements and how sensitive are prices to new information or shocks in the marketplace, those blue bars become really important. When the inventories are very, very low, we tend to have much higher prices with a lot more price volatility. When those blue bars are really big, meaning there's a lot of inventory left over, what that signals is that we will likely have lower prices with more stable prices. And now, normally when I talk about this, I ignore kind of this production consumption piece, but in flax, I really need to talk about this some more. So when we think about the production of flax in the United States, which is the green line, and then we look at total consumption for all uses, primarily crush, which is the red line, we see a difference. And my question to everybody is, so how can consumption be consistently above production? And the only way we can do that is with imports. And so I've added the yellow line that runs through the middle of this, which is the import portion of it. So a fairly significant portion of the total consumption of flax in the United States, in particular in this crushing sector, is actually coming from imports. And I looked this up. I tried to find some government sources for it. I wasn't able to track those down, but I did find some industry estimates for where is this flax coming from, and surprise, surprise, most of that is coming from Canada. So again, there's a pretty robust flax import system from the Canadian side into the United States, which is helping to support the crush demand and then the use and consumption of the linseed oil as well as the linseed meal. So that raises the question, well, why can't we produce it here? And the simple answer really comes down to these competing crops. That if we're going to produce it here in the United States, if we're going to try and transport it within the United States system, it has to be competitive with, from a farm production standpoint, with other crops. Okay, versus when we look north of the border into the Canadian system, they have a very diverse agriculture, but it's not as diverse as we see here. It tends to be very dominated by spring wheat, by canola, a competing oilseed, pretty large in the pulse crops, pretty large in barley, especially in Alberta and in parts of Saskatchewan. But they don't do a lot of soybeans, although soybeans acreage is growing, and they do very little corn. And so there's pressure from competing crops is now starting to shift those acres, where those acres are produced. As I said earlier, the acreage in North Dakota has shifted north and west into those areas that aren't heavy corn and soybean producing regions. And that's also kind of a result of some of this profitability issue. So if you're a producer here in this region, North Dakota, Minnesota, South Dakota, or Montana, you're doing the same thing. You're crunching the numbers and saying, well, what's the relative profitability of growing flax versus some of these alternative crops? And that's one of the challenges that we're facing right now for domestic production. Okay, so what about prices and price volatility? Where are we sitting with the current market price? I did chart this out. Now, this is the spot market for flax. I'm going to talk a little bit about contracting and contract production in just a moment. This is the spot market. So typically for these smaller market crops, a large portion of the production is contracted before planting. And again, as David said, the industry is looking to make sure that they have a stable supply source. So in order to do that, this market is small enough that they have to entice or encourage farmers to be able to produce that with these pre-plant contracts. Now, the pre-plant contracts typically do not cover all of the production or all of the bushels that are produced. And so there is a relatively small or thin spot market flax price. And now this is a blend of several different markets, primarily in kind of central and north central North Dakota. There's a cluster of companies that buy flax from that central portion or the north central portion of the state, and that have regular price postings. Now, one of the things I want to comment, again, going back to that 21-22 time period, and let me come back here when we had relatively tight stocks, especially coming into that 21-22 time period, we had very, very high prices, okay? And some of that was due to yield, some of that was due to acreage. Since then, as farmers have responded, which we always do by planting more acres and by having better yields, prices have now returned to their kind of more normal levels, and for the last several months have actually been relatively flat. So on the right-hand side, I mean, we've been at that about $12 range for a long, long time in spot market. Now, obviously, again, delivered directly to the crush plant, that's going to be a little higher than that, but you have to include the trucking costs and you have to include the transportation costs. So let me separate out my thoughts, and I'd be happy to try and answer questions and have a discussion with others about this. My thoughts right now is that for old crop flax, if you got flax in the bin, right now the market is very comfortable. Really haven't seen any kind of price changes for quite some time. So the question I have in the back of my mind is, what would change in the marketplace? What shift or adjustment would occur to cause prices to go higher? Okay, and I can think of a couple things on the horizon that might have an impact on that. Obviously, the first would be planted acreage. Now, I know there are bids out right now. I do get the daily bid sheet from the Cargill Crush facility in West Fargo. The current new crop bid is about $13.25 delivered to West Fargo. And I know for some farmers that's not necessarily a real a price that gets them excited. I understand that. But right now, again, we have some adequate supplies, domestic consumption. There's adequate supplies in Canada. I'm going to talk a little bit about the Canadian crop here in just a few minutes. So the point I'm trying to make is for old crop, we're going to need some kind of spike or some kind of shock to the marketplace. That may occur as we get into spring planting. Now, if the planting progress goes smoothly, and the contracted acres are there, it will likely stay relatively flat. Now, if we get into either some trade issues, and I know I can talk a little bit about what's happening right now with the U.S. and Mexico and Canada trade disputes that we're having, and what impact that might have on flax prices. But barring that, if there is no major disruption, we're likely looking at these kind of prices moving forward. Now, if there's some planting progress, some planting problems in the spring, either too dry or too wet, or we get into that March prospective plantings report and it looks like suddenly flax acres are going to be down significantly, that will have an impact that will spur hopefully some increased prices in the contracting side as well as some increased prices in the old crop or the crop that's in the bin right now. So barring some major issues, either in the US or in Canada, I'm going to talk about the Canadian numbers in just a moment here. I really don't see any major shock value. So we're going to need either some weather problems, either in the US or Canada, or political problems. And I always point to those two things because those are the most difficult to try and forecast as we move forward. Now, this is the Stats Canada information. This was updated as of January 20th. I want to just explain this very, very quickly. So similar to USDA, Statistics Canada does reporting on supply and demand conditions for the major crops that they produce in their country. Now, again, flax is a relatively small acreage crop in Canada as well. So some of these numbers get to be a little bit hazy. So when we're doing survey work or we're trying to get some good data and information on planted acreage and yields and in particular for the consumption portion of it, it gets to be a bit difficult to try and get those because again, the folks in the industry don't want to share very well, and I don't blame them. So just to explain this, the column on the left-hand side in green is from 2 years ago. The column in the blue is the current inventories. So that would be the crop that just got harvested. And then the column on the far right-hand side in red is the current forecast coming out of StatCan. Now that's all mathematical forecasting. So they haven't done any survey work of farmers. They haven't done any, any formal estimations yet. What they're doing is looking at what is the normal acreage balance that we see in their country, what is the profitability or projected profitability, and therefore trying to make some forecasts on what they think will happen to acreage. They put in a trend line yield and they look at what they estimate for total consumption. So let's just take a look at this really quick. And I want to go through the production numbers, but also the consumption numbers. So if we look across the top row for planted acreage, the current thought process right now is that acreage in Canada will stay about the same as last year. And when we look at tons produced per hectare, or basically yield per acre, again, they put in a trend line yield, very, very similar to last year's numbers. So when we do the math on that, planted versus harvested acreage and trend line yields, we're looking at total production, the forecast for production, very, very similar to the 2024, the current cropping year. Now, there are a few tons of imports, and I just want to comment a little bit. The import numbers and the export numbers are the ones that are easiest and most reliable. Those are the ones that are going to be recorded with the most accuracy, because just like the United States, Canada does have regulations on the importation and export of agricultural commodities. And so as those pass the border, either inflow or outflow, those numbers are tracked. So when we think about the imports, the forecast for imports, as well as the exports number towards the bottom, those numbers are going to be pretty accurate simply because they're tracked on a daily or weekly basis. Okay, so total production numbers. I think, yep, I got my numbers right. So total production is going to be about very similar. When we look at total available supplies, though, that goes down. So why does that go down? Simply because their inventories are expected to drop. So there's less from last year's crop being pulled forward. So the supply chain within the Canadian system is expected to tighten just a little bit, not dramatically, but tighten a little bit, which should be positive for pricing. Now, when we look at usage, now this has been kind of my frustration, and I think I understand why Stats Canada is having problems, is that a lot of the large commercial crushers in Canada don't do flax. So when you think about canola production, which is their major crushing sector, those are very, very large facilities. They're high throughput. They're the ones that are doing the big canola crush. They typically don't shut down, clean out, and try and run smaller runs of flax. So the flax crushing that is done domestically, and I know there's some, are at these relatively small facilities. And again, to be able to survey those people and get some reports from them gets to be a bit challenging because again, there's some issues with reporting. If you have too small a sample size, statistically or at least legally, many times we can't report the numbers because there's too few observations within the survey. So from a crushing standpoint, I know there is domestic crush in Canada. It's just Stat Canada is not allowed to report those numbers. It's going to be very difficult to get, and again, they have some reporting requirements. So when we go through the math on this, that bottom line ending stocks numbers is going to be a bit inflated, simply because we don't know exactly what that crushing number is. So when we think about exports, they do have a pretty robust exports program for flax. A lot of that does come to the United States, although some of it does go into Europe. There's actually some trade back and forth between Canada and the European Union when it comes to flax and flax trade. There's also a little bit that I believe goes into the Black Sea region. Again, it's an inflow and an outflow, pretty small trading volumes, but there is a little bit of trade that flows between those two. And then we have the feed, waste, and dockage, and most of that is going to be within the feed sector. And again, some of that goes for not only human food, but also for livestock feed or pet food market. But I think a lot of it's livestock feed. So when we look at total usage, so we're taking total supply minus total usage, and you come up with an estimate of those ending stocks numbers. So as we look across time, those bottom line numbers, the ending stocks for flax supplies within Canada, even though there's some kind of inaccuracies or some missing values for the crushing demand, is expected to start going downwards. And so we're starting to take that inventory down, which should be supportive for prices, not only here in the United States, but also in Canada. So again, this is kind of a brief overview. I know I'm finishing a little bit early, but it's been very, very difficult for me to find some really good information on flax and what's happening currently within the marketplace.